The most nerve-wracking point for me as an accountant is when you have one person that is the gatekeeper. So somebody that is basically they have access to everything. They're probably doing things without other people involved. They've been there a long time. They tend not to take a lot of holidays or let other people take over. They don't delegate a lot. That person is probably walking around with that big red flag on their shoulders, whether they deserve it or not. But that is a real risk for any business.
All right, welcome back to the Scale My Clinic podcast. And today I am super excited to have Kelly Chard. Kelly is here to talk to me about the ultimate guide to fraud protection in your general practice. Kelly is an accountant and founder of GrowthMD. Welcome, Kelly.
Thanks, Todd. Thanks so much for inviting me on to talk about this super important topic.
Awesome. So what we are going to, at the end of this session, people are going to know comprehensively all of the things they need to be looking at their general practice in order to prevent fraud. The way I look at this, Kelly, is that if this happens to you early in your career in business ownership, in our case, practice ownership, then you often have time to recover and learn from it. If it happens to you later in your career, then it could be big enough that it knocks you right out of the game. And unfortunately, you retire having very little for the work that you've conducted. Could we start with a couple of really gory stories that are de-identified, obviously, of some of the experiences you've had, just so people pay attention?
Yeah, absolutely. So I guess the fraud always comes on a spectrum, right? So it can be big or it can be small, and it can be a one-off event or over a really long period of time. So on the bigger end, the horror stories that we've all heard about and I've seen, I think you've seen recently, people committing pretty mass style fraud in terms of Medicare fraud. So somebody at reception, phantom billing Medicare, deleting those transactions in the PMS system. Nobody's the wiser. The practice is exposed. Suddenly there's all these phantom consults of being paid to an individual. Money's nowhere to be seen and a big mess to unwind. So that's happened a couple of times in my experience. At the other end, there is theft that I think occurs a lot that people don't realize. So one that I've seen, which started small, was an internal staff member, did the bookkeeping for a practice, felt pretty undervalued. I think always felt a bit underpaid, a bit of a, chip on the shoulder type thing. So they decided instead of getting a pay rise, that they would just start paying some personal expenses. So we uncovered a few years of utilities, electricity and rates and things like that being paid, the person's personal expenses being paid. Pretty small amounts, right? So they sort of slipped through. And when you've got a big electricity bill for a big practice and the, big lumpy rates, you may not realize. And that was happening, at a small scale, but that I've seen. And then the other one that's pretty common, unfortunately, to either a big or small capacity is cash. So yeah, cash is just the worst thing in medical practice. I wish every medical practice was cash free, in my opinion. That would
Too
be
tempting.
the ultimate, all right?
Yeah.
Unfortunately, not everybody in the population, particularly some of our older people, don't want to be cash free. But I think as Scale My Clinic and GrowthMD, have mutual clients who have gone 100% cash free, which is great. But that's not possible for everybody. But look, cash is definitely such a massive risk point. And I still can't believe that I can say to, a new client will come on, I'm like, what's your cash policy? So when you take cash at reception, what do you do with it? I don't know. I think someone banks it sometime, but I'm
It
not sure.
automatically appears in the account. Yeah,
Yeah.
gosh.
So look, there's big and small things happening. For me, it's important to talk about this because it does happen more than people think. And I think a lot of people don't want to talk about it, right? Because, I was scammed years ago by not in my business, but personally on my credit card stuff. And I felt really stupid afterwards. I was like, how could somebody as smart as me fall for that, right? Well, Oh, well, I did, and I think but I didn't really wanna tell people because I felt silly. So I just think it's probably happening more than we realize, and people don't wanna talk to their colleagues about it because it is a little bit, a bit of a stigma attached or they feel silly.
Right. So you touched on a really important thing with this. I think there's a lot of shame associated with people that are the victims of these types of crimes. And unfortunately, they're often perpetuated by people that they considered friends or at least friendly colleagues. And so there's this real dissonance between, oh, how did this happen? Why would they do this to me? And personalizing it. And then, as you said, what happens is the learning is never shared. The other thing that happens is these people are often never prosecuted for their crimes. They kind of move on to the next environment and often do it again, right? So there's a lot of serial people that get involved in serial fraud, defrauding businesses of money that isn't theirs. So maybe let's talk about what are some of the fundamentals that we need to be thinking about in the practice just to minimize the chance that it happens to us.
Yeah, sure. So, look, I guess as an accountant, when I'm talking to somebody, I want to talk about minimizing opportunities for fraud, right? It's pretty straightforward. Back in accounting, did you do accounting at school, Todd?
No
No?
accounting for me.
Yeah.
I rely on, I've said this to before, Kelly. I strongly recommend paying experts extremely well, getting second and third opinions. I love paying accountants because it usually means I've got high quality problems to solve. I never solve these problems myself. I would be calling you.
Good. Well, back one of the concepts you learn is the whole separation of duties. And look, I'm sure you've heard that before. And it's still, no matter if you're a massive business or if you're a tiny micro business, the same fundamentals apply in that you can't have one person running everything. You can't have one person processing payroll and approving timesheets and paying bills and doing the banking. It is poor separation of duties. So I think if you take it back to the fundamentals and we can talk through sort of more specific areas, but at the core of it, we want separation of duties and we want good controls over things like ITs, password security, that sort of thing. The underlying foundations when you're thinking about all the different sort of functions and roles in the business.
So this is not a place to be lazy, right? What we want is every single person in the business has their own login for everything. So there's no joint reception login, and there's certainly no login that has the password that's the local postcode or any of that kind of stuff. There's an individual login for any piece of software that is used, unless it's getting educational material or something like that, where there's zero risk with it. But anything that involves processing payments, so the PMS, the practice management software, all of those should have individual logins. Any access to financial systems should have individual logins and two-factor authentication as well enabled, just so as that there's no risk of somebody kind of borrowing a login. We should never share a login, or other people shouldn't know logins. So you don't want to see these plastered on the front of computers with passwords and logins. I think there's some really easy habits that people could get rid of, which involve some hassle, but on the other side of it, you've just got a much cleaner business. And so maybe we'll talk a little bit more deeply about the separation of those responsibilities, just so people know exactly what you're talking about.
Yeah. Okay. Sure. So let's take an example of, say, a ordering process. So you're ordering, say, medical supplies. So let's take that process and sort of walk it through from when you first order through to the bill payment. So what currently happens often is that somebody will place the order with, Team Medical or the like. Then the invoice comes in and the goods come in. Often the goods aren't checked against the purchase order. So that's one issue, but that doesn't really matter. The invoice is still sitting there in somebody's in tray. The worst case, somebody's printed it out and put it in a bills to pay pile. Nobody else has had a look at it, and then somebody makes the payment. So along that process, we have different people involved here, but nobody's independently checking. So the best case scenario would be somebody's responsible for ordering. That person submits a purchase invoice or a purchase order. The goods come in, it's checked off. So maybe another person checks it off again from the person that ordered it. So maybe your nurse orders, practice manager checks it off.
And when we say checking it off, just so again, anybody listening knows exactly what you mean. They're opening it up and they're going through and saying there's two of this, and they're saying, yep, there's two of that. There's three of
Yeah,
this, yep, there's three of
yeah,
that. Okay,
yeah.
cool.
seems cumbersome, right? No one's got time to do that. I get it. And so I know that in practice, sometimes that doesn't happen, but that's best practice, right?
Well, look, anybody that's been to a McDonald's drive-through has done this process at the end of the drive-through before they leave because they know you don't always get what you order. So just imagine you're in the McDonald's drive-through and that you're going through your order. That's the way to think about
Yeah.
it.
Yeah, absolutely. So that's verified as received. And so then that document that has been signed off as, yes, we've received those goods should really then attach or be given to the accounts payable. Accounts payable might be the bookkeeper. It could be actually a piece of software that you're just submitting that through for the goods to be paid by somebody else. If it's a physical process or an automated process, the next step is submitting that for payment. Somebody will pay that then. They'll pay that bill. A different person than the other people involved will pay that bill. The bill goes to banking, and then best case is the owner or somebody else with approval rights will approve the payment. So on the way through, you've got a separation of somebody who's ordering the goods from checking it. So there's no sort of theft or funny things going on there. You've got it independently approved there for payment. The person who's paying it, somebody else has said, yep, it's good for payment. And then at the end, we've got the person who's actually physically paying it separate from the person approving it in the bank. So there's no funny business about paying to different accounts and different amounts and things like that. So I guess sort of in that process, what we're trying to visualize is that there's a set of different tasks there. There's the custody of the goods, there's verifying that we're paying for what we got, and then there's making sure that the payment corresponds to the invoice and that the bank payment physically matches the invoice. So there's, 4 different sort of tasks there. Now, I appreciate that sounds like practice owners are saying, what if we had to do that for everything in our practice, we would never get anything done. However, this is only going to apply to physical things like ordering supplies and things like that. And there is automation tools and things that you can get to help. So there is one that we use with a few clients called Approval Max. There's a lot of different ones out there. You can actually automate that paperwork flow. So someone sort of in a system is actually checking off those steps along the way. So there's an electronic audit trail of all that happening. But for other things like a rates invoice comes in, right? It can come in, you can upload it. Somebody else, when they're paying it from the bank, is going to eyeball that rates notice, go, yep, that's the right one for us. And yep, I release that payment from the bank. So it's not like every bill payment is this really cumbersome process. But what we're trying to get along the way is different people doing different functions or some sort of independent verification so that we don't have the practice manager or the lead receptionist or somebody else, the bookkeeper, whoever it might be in the practice, doing everything all the way through and exposing ourselves to any gaps along the
I
way.
think, Kelly, there is also a tactical benefit in something being a little bit more cumbersome. So one of the things that I like to talk to people about is just reducing the frequency of ordering. And so trying to have maybe a 2-week or a 4-week cycle on this, 2-week or monthly, where you're doing your ordering in batches and that you make sure you have sufficient stock to carry you through. That can take a few calibrations to get right, but it does mean that you kind of get all of your deliveries at one time and people aren't kind of being continually distracted by doing stock takes or making small orders. And then you often end up with that thing because the order's below the threshold, you pay for shipping and all that other stuff. So it's a good reason for people to reflect on, actually, you know what, maybe I should just do 12 or 26 orders a year and that's it. And this is the template for ordering with whatever suppliers you have, and reduce the frequency of ordering and just kind of make sure that you hold enough stock to keep you through that period of time. Okay, cool. What do you think is next?
So I guess that in terms of separation of duties, Todd, or yeah, so I guess there's other functions where you want things to be separate. If we're talking about reception, there is often a lot of processing that happens at reception, refunds, deletions, voiding things that is done by one person in the moment and not really ever checked, right? And this is probably a bit of a blind spot for a lot of practices. So important. Like you think about it, that the people on reception or the process that you had as a practice owner in your reception is your front of house point of sales process essentially. And you're doing that often on behalf of other small businesses that are located in your practice. So you should be getting it right, but it's actually usually super loose. So the things that we need to be thinking about there is the permissions. So who can do what at reception? So if somebody comes in and you process the billing and then you get it wrong, do you just fix it yourself then? Do you need a second set of eyes to do that? Is it somebody with a higher access level in your software that can come along and approve that refund? So those are the sorts of things, I guess, when we're talking about separation of duties at reception that we need to be thinking about who can process what and when something escalated.
There's a term here that I think is useful, which I've heard just called least privilege. So giving people the lowest access to the privileges that they need to do their work. And then, as you say, if a correction needs to be made, that should go to a senior member of the team. Now, obviously, that will vary depending on the size of the team. But in the event that you can't remove those privileges because they're required for the business to function, then it must be audited. And this comes back to single logins in the practice management software. If you've got your payment terminal integrated to the PMS, this is less of an issue. But I still talk to practices where they're not integrated. And so therefore that's another area where a payment could be voided in one platform and not necessarily in another. And so we should never have common logins to the device. They should be personalized if those devices are separate. And ideally, there's a really, really clear process over how this happens, an audit trail and appropriate checks and balances, because this is kind of where a lot of it goes wrong, right, Kelly? Like it's really easy to pocket a couple of consultations a day, and that could easily be $200-300 if you did it the right way. And it's $300 a day if you're there 5 days a week. You've got yourself 75K a year in cash, and life is a lot better. And so you do need to audit any of these reversals, these paybacks, make sure that that's difficult to do if appropriate and impossible if appropriate. And then if it is appropriate that you're auditing exactly what's happened, that's part of your daily and weekly cadence.
Yeah, absolutely. And I think it's very important to have that daily close off process or that end of day process. So having a look at what's actually gone through your PMS and how that correlates to what you've taken in terms of your FPOS or Tyro or whatever your terminal is, and cash as well. And everything, there should be a daily balance up basically to make sure that all the components are working in together. And look, sometimes it's complex because there's money coming into the bank directly from third parties and that sort of thing. But you can generally come up with a daily process or weekly, daily balance off to the Tyro and the cash, and maybe sort of some other weekly process to come through that brings in third party payments as well. So, look, there is definitely things that you can be doing there. The other one is one of our clients actually was alerted to fraud via a Cubico dashboard. So there is a reporting Cubico that shows you all your reversals and deletions and you can sort it via doctor, you can sort it via staff member, so the person who's actually processing that, and you can sort it by payment type as well. So you can sort it by cash or FPOS or whatever it is. So it's really important if you go into that dashboard and you're like, what are all these deletions? You can bring that up and go, why do they always happen every Saturday morning? Why is there all those deletions? And you can join the dots. So look, obviously we never want to be trying to track people down and hunt people down and see that, someone's doing something wrong. But if you're doing all these checks, and also this is a visible process in your practice that people know that you are checking, there is good systems in place, then your chance of fraud goes way, way, way down.
Yeah, I think the visibility is super important. Just to say, this is the way we run this business. It's a tight ship, and people know that it's normal to audit those things. They're less likely to take the mickey. Often, the kind of pathway to fraud is the first time is sometimes accidental or opportunistic, and then they wait. Did anybody notice? And then when nothing happens, they're like, oh, okay, so this is the way things work around here. It's a little bit lax and loose. And so they try again, wait, and then it becomes really clear that no one's watching. And so it becomes easier to build a habit. And I'm going to say an addiction. People often have actual addictions when they're doing this, that maybe the common things like gambling and so forth. But this becomes a way of just getting easy money. Could we talk a little bit before we move on to the next thing on the split responsibilities. Can we talk a little bit about a kind of personality or the traits of the personality that make you nervous when somebody's talking about, say, for example, a PM or somebody in a position that's likely to have their hands on most of the levers, if not all?
Yeah. Okay. Well, I'll say first, the most nerve-wracking point for me as an accountant is I speak to a new client, they come on and I ask the owner a few questions, how much do you spend on this? Or, how much is the billing? A few different things. They don't know. They say, Frank or Jenny, my practice manager's been with me for 25 years. They run everything. They do everything. I would have no idea. That is a moment where I go, no, please. Not because Frank or Jenny is probably doing anything wrong. They're probably beautiful, amazing, supportive people. But I can see that this door has been left open for somebody to be taken advantage of. So I guess what we're looking for, what these red flags are, is when you have one person that is the gatekeeper. So somebody that is basically, they have access to everything. They're probably doing things without other people involved. They've been there a long time. They tend not to take a lot of holidays or let other people take over. They don't delegate a lot. That person is probably walking around with that big red flag on their shoulders, whether they deserve it or not. But that is a real risk for any business.
And then the owners, Kelly, often say, oh, this person's wonderful. I could never do without them. They just log in and they do stuff while they're away on holidays. They look after everything. They're so good. They just can't take proper holidays, even though I tell them. That's kind of one of the things that I often hear. And like you, I think there's all these sirens I'm hearing. And they're like, oh, they're the best person. They're unreal. We couldn't do without them. I think, well, you probably have a few $100,000 more.
Yeah. 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 So look, yeah, it's, nobody should be giving up that level of control in their business to another person. So I guess that's the biggest red flag. And I guess then when we look at the broader team, I like to see a team that is, I guess, quite well educated about things. So we have some amazing clients and the team are really keen to get into some automated tools that'll automate some processes. I love that because that reduces your risk automatically. People that want to step up into different roles, that are willing to follow a process. These are the teams that are usually going to be high performing, but also probably have a low risk of fraud. It's when there's manual processes, not enough people involved, someone does everything, the others just answer the phones and process a few things here or there. That's when we're worried. And also, I guess, the classic change of financial circumstances of anybody. So if you've got some team members that suddenly seem to be buying fancy new cars or coming in with a Chanel handbag, then, that could be a maybe they just came into money, but that's, I guess, the classic sign that something could be
It,
amiss.
it could be your money. That's what you're thinking. That's good that you've come into money. I just don't want it to be my money.
Yeah, that's right. So, yeah.
That's good. That's super useful. I think sometimes what's useful is for people to, what I want is people listening that may be at risk here to think, actually, that sounds a little bit like my relationship with my PM, ops manager, whatever that may be. And then they go back and start slowly unwinding some of those excess privileges and overreach that has been put in place. Let's jump back to the separation of responsibilities if there's more there. Otherwise, let's move wherever you think is appropriate next.
Yeah, so I guess just on that, we want to always make sure with any financial process that it's not reliant on one person, but also that there's good oversight externally as well. So you said before, Todd, that you're a fan of outsourced accountants and bookkeepers. I think it's great to have somebody periodically check in your financials, somebody externally that can look at the big picture, whether that's a bookkeeper or some consultant external to the business that meets with you once a month, whether it's your quarterly meeting with your accountant, but somebody that has some oversight over to your business. So I think that's really important. I guess we could go into banking. Banking's a big one as well, specifically having those approval processes in place in your banking. Really, people within your practice that are employees should only be having upload or setting up bill payments. And ideally, you should have either a senior, very reliable separate person or an owner approving payments in the banking. So I think we've acknowledged for a long time now that practice owners are very busy. They're busy seeing patients and they're busy doing all the other roles in their business. And people probably think, well, I'm too busy to authorize the payments or the payroll each week. It doesn't take long, and I think it's such a great security measure, and it shows people know you're involved. People know that you're the owner logging approving the payment. I think that's a really important thing for people to do.
So let's go a little bit deeper on this, just in terms of how we do it. We do it every 2 weeks. The money only moves in that meeting, and there's no movement of money outside that window for any reason. And so I'd love you to talk through, because people build this up to being something terrible. And I'll be really honest, at the start, it could be. Like, it could actually go for a while because there'll be a lot of things you don't necessarily know. You're going to see bills, you think, what's that for? I don't know why we're paying this person. Can you talk through, like, how long would a well-run finance meeting where you're moving the money in the meeting, how long would that actually take?
Look, I don't think it would take very long at all. So the probably what is important to how long that meeting takes is what the process is in the lead up to that meeting. So if you agree on a bill payment cycle, and you said yours is every 2 weeks, right? That's pretty standard, every 2 weeks. And look, on that, people say, "Oh no, I can't do that because people want to be paid now, and people ring me, and we've got bills to pay every day." No, if you get into a good cycle, every 2 weeks is enough. I promise you, your accountant's not going to be on you because you paid it 2 days late. And, if you've got a rolling cycle, it's going to work. So say you pick 2 weeks. In that 2-week period, you have all of your bills, say you're using Xero, and Dext or HubDoc or something like that. Those bills are approved, they're uploaded, they're then sent into Xero, and they can go straight to pay, or they can go to an approval tab in Xero. You can have somebody coming in, maybe the reception and the team upload things as they come in. The PM could go in on a Monday every 2 weeks and approve those for payment, or every week, approve them as they're coming through. So yes, she's checked them. They look right. The bank details are all set up in Xero. This is going to go into the next cycle. Then the day of the meeting, somebody prints out a report, says, "These are all of the bills queued up, ready to be paid. Here's all the supporting docs, if available, connected in Xero, sitting there waiting for you to eyeball them if you want
Now,
to."
now you're just talking about your fantasy that at the
Yeah,
end of the
I know,
year,
right?
when you say, "Where's that invoice?" that it's actually attached there. We're
That's right.
talking about
You
you
might
just
want
hoping your members do all their homework, and when I click on that, it's gonna say exactly the same number.
to. Absolutely. Um, and so you get to that meeting and you go, "Great, okay, we've got $45,000 of bills to pay. What are they?" And there's 15 suppliers or 20 suppliers sitting there. Those suppliers ideally are all known to you. They're your vetted suppliers that are set up in Xero with their ABNs and their bank details. And then you could look at them on a screen, or someone can print you out a piece of paper if they want to. I would prefer a screen. You can click into them and you can see the underlying invoice behind them. Then there's a batch file, ABA file that can be uploaded by somebody else into the bank if you wish, or yourself, and you can approve it based on that you've seen the underlying data. That kind of process for you, to me, that should not take long at all. That should take you 10 minutes at the end. I don't know. How long does it take you?
Yeah, so ours is probably 10 to 15 minutes for the process you're talking about, and there's maybe another 5 to 10 minutes of conversation around, some improvements or adjustments to money flows that are made. But the whole thing is scheduled for 30 minutes. Most of the time, we'd be done in 20.
Yeah, that's right. So the actual approval process is probably not taking you long at all. And you're probably getting some extra value out of the conversations in that meeting about, well, just wait. Actually, why do we pay the cleaners that much? That looks too much. I think we should go out and get some quotes on that. So, there's probably other added value that comes from that process that you've got set up. And look, some people don't do it as a meeting. Some people do it as a shared emails or some other system. But as long as there is eyeballing of source documents, everything's making sense, they're an approved vendor in your system, then it should be a pretty simple flow. One thing that we now have to worry about, like, technology is great. This is amazing for us, all the different tools we've got to cross-check bank numbers and ABN numbers and things these days. One of the tools that's not so great with technology now is the rise of AI being able to make fake invoices and fake bank statements and things like that very easily. So that's just one sort of thing that you've got to be aware of. It's pretty easy to, there's even, I can't remember the actual name of it, but there's one AI product that's just designed to make fake bank statements now. And they look legit. You would think that they look perfect. So
Right. So this is a good segue into this verification part because that's becoming more and more important, right? We've seen general practice is at the moment a ground that's being plundered by phishing emails. An email that looks like it's from, hey, it's from Dr. Kelly Chard, sending it to me, the bookkeeper, saying, hey, I've changed my banking details. Could you please adjust my next payment to this? And they're being helpful. They adjust the payment details. Next thing you know, that money's being whisked off to Nigeria or somewhere else. How should practices be worried about this and other environments where there could be falsified changeover of details?
yeah. So I guess firstly, you need to be training your team on what to look for and making sure that everybody in your team are aware of what phishing emails look like and how people do scam you these days. So that would be, the basics for all of us, really, in every facet of life. The next thing is you should have a policy in place. So for instance, payroll. You, as the payroll person processing the pays in that practice, you get an email from one of your team members. Hi, Julie. I've updated my bank details. These are my new bank details. You don't just have to go in and update Julie's details. You pick up the phone. Julie, I've got this email. We need to do a verbal confirmation of your bank details because I'm not uploading them until you give me the verbal authority. So can you repeat them back to me? Great. We've done that step. We've made a note of that in our payroll files. And now we will change the bank details. So this has happened multiple times to our clients, is the payroll employee bank change issue. So
I'm going to add one thing to this, Kelly, because I've set up my 11 Labs profile. I've used 11 Labs where you do a voice print. So my voice print, it's 2 hours of training on all the work I've done. I've showed it to my family. They're like, that's pretty realistic. It's possible to create a real-time voice print that sounds rather very much like the person. So I think this is just a triple verification where you would have the phone conversation. Unfortunately, the phone conversation is not auditable. So you can just say, I called this number at this time, but you can't do anything more than that. So I think the other thing that's useful is just to say, I'm going to send you a text message afterwards that you're going to verify. And obviously, this is using all of the original details that you have. So if anybody presented new details, don't use any of those. And then you need to go back and block the dodgy emails. One thing that people often learn is if you hover over the name, you'll see that the email is actually not what it's presented as. The name is a false name on top of a dodgy email. But I just think that's a useful thing just because AI is changing this. I've got a mate of mine who logs into his banking, I think it's with ANZ, and he literally says, my voice is my access code as part of the login. And I was just listening to him doing this thinking, shit, this is so easy to copy. And even you could just record him doing it and then do it. I'm like, dude, don't do that. Just change to something else.
absolutely. And so then that's the thing, right? Your systems have to move. Like, so the system I just said to you, yeah, maybe in 6 months' time or 12 months' time, there's another step that needs to go on because things move so fast. So I think that's an important point that we always need to be adding and checking. Is this process actually working or are we exposing ourselves how fast everything's moving? But yeah, independent verification is massive. And you'll see if you ever get anything from a lawyer or an accountant now, they usually will say, do not pay these, like do not pay the tax office until you call us to verify the bank details, basically. Because I'm not going to send somebody a PDF attachment saying you owe the tax office $100,000 and trust that that won't be intercepted and the bank details changed. So that independent verification and how you do that and documenting that and making, if you're the person that's responsible for having the correct payroll or vendor payment details, you want to document that you spoke to somebody on this time. And as you say, text or have some verification because it's so hard to trust what you're getting via emails these days.
And this is also, Kelly, why my preference for that fortnightly meeting or whenever you make it is that it's synchronous and real time. So on Zoom or something, obviously turn off recording at any point in time that you're sharing screens and there's financials. But I like them to be synchronous because you can kind of talk through these things rather than email chains, which just get really messy. I don't love email anyway, so it's probably a strong bias of mine away from it. But synchronous meetings just allow everybody to play a better game because they kind of understand expectations and standards on both sides. particularly if it's a third party that's doing the bookkeeping, because everybody's going to have slightly different preferences. And it just removes the risk of assumptions being made with email chains. And so I really love this, just to be that we lock in this time, it's done. And then any kind of verifications that are afterwards, you're like, this payment won't go through until this, and this is done. You're going to share it in this way. And then after that, we'll make the payment. That's really useful. And it's a common problem at the moment. So I want people to have a really high degree of skepticism. I was born earlier than you, and so I won't assume your age, Kelly. That would be unwise to do. But my kids bring stuff to me all the time that, from the internet. They're like, oh, look at this thing. And I started to say to everything, bullshit, 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 just from an age when I'm skeptical about everything. And so I'm like, I really want to see some verification or cross verification of this. I think if you're ever in finance, it's really good just to think this is bullshit until proven otherwise. You're less likely to be caught out.
Yeah, absolutely. And you can't get that money back, right? Maybe you can. If you go through a long process, maybe you can recover some of it. Maybe you've got some insurance policy might cover some losses. But for the majority of people that are scammed or defrauded, the money never comes back. And you think about, as a practice owner, how much you need to bill. If you lose $100,000, how much of that's 100,000 of essentially profit. So
That's $1 million in most practices, right? That you'd have to bill. So it's two doctors working full time, flat out for a year to recover. It's a huge amount of money, and you should never be lax with that. That's a great example.
yeah. But I think that's just going back to your meeting. I just think that sets such a great example too, that it sets the tone for your organization, that I, as the business owner, am involved in the finances. I know what's going on. So I think that is a great thing that all the listeners should think about implementing, because at the very least, if the least that meeting achieves is getting the bills paid, but showing everybody that you're there, you know what's going on, you know who the vendors are, you know who you're paying, that's a massive sort of deterrent to fraud.
Absolutely. All right, let's keep moving. So one thing that I found really useful, so petty cash is an area that is still used, right? And it's a terminology that I don't love. Let's talk a little bit about petty cash. And then we've got something that we use internally in our business, probably not to the level that I'd like to, and I can share that if it's relevant.
Okay. So I said at the start, cash. uh, the pain that cash causes us in our reconciliations on the other end as accountants is never ending. So when you take cash at reception, you need to have a process for what happens to it next. Unfortunately, the current process is usually take cash, put it in a cash box or cash drawer. We'll leave it there, and then at some point in the future, maybe after a week or so, somebody will come along and collect it, and they may take it to the bank that day, or they may not. Then what usually happens in between somebody coming along to collect it is that somebody comes in and says, oh, we're out of milk. Okay, oh, well, here, take this $20 from the cash drawer, go and buy some milk, bring me a receipt back. The receipt gets chucked in some drawer, the cash is gone, and suddenly, from an accounting point of view, you've got unbanked cash, so cash not accounted for, and you've also got an expense not accounted for because nobody's ever submitted the $20 milk through any formal channel. So, like, I've had people over the years paying all sorts of things through petty cash. It's usually things like gardening, fish tank maintenance, any of those sort of $100 here or there type things that happen with a physical person when they come into the practice. So at the end of the year, sometimes we might get a client come, or maybe a new client, and we say, okay, so we're reconciling here, and we've got, that you've collected $25,000 of cash over the last few months or year. But we can only track that 8 has gone through the bank account. And they'll say, well, yeah, because the other 13 or 17, I want you to think I'm a good accountant there. The other 17 have been used for petty cash and to pay things within the practice. And the practice manager's probably got a record of all of that. With the practice manager, well, I don't know. Like, yeah, I think I've got a few invoices here and there, but nothing. So we don't know if that money is actually being spent and just the invoices are missing, or if somebody's actually taken it, or if it's just gone missing. Sometimes cash does turn up in strange places 6 or 12 months later. Somebody forgot that they put it somewhere else or Sometimes the owners will come back and go, "Oh, that's right. Yeah, I did take that 5 grand just before Christmas because it hadn't been banked, and, like, I didn't wanna leave it in the clinic, so I took it to Fiji." But so look, cash is just you need to have a strict protocol around cash. If there's anything easy in your business to steal or go missing, it's going to be cash.
Yeah, well, that's the thing, right? That they go down and they see one of these, see a pineapple in their cash box, and they say, "Well, you know what? That's pretty close to what it costs my kid for tutoring twice a week. And so if I grab a pineapple twice a week, I get free tutoring. The business is looking after my family. And I know one of their values is family. Nobody's going to be offended by that."
Yeah, absolutely. And people will rationalize things. Actually, that's one of the this is sort of a bit off topic, but going back to fraud, they say that there's the 3 legs of fraud, right? Or the triangle. So, pressure or motivation. So the reasons, as you mentioned before, addiction or financial pressures, the opportunity, but also the rationalization, right? So somebody saying, "Oh, well, I'll just take this because I'm feeling undervalued," then they're not going to miss it. And I work really hard, so I can rationalize that I can take this. Or I'm going to loan this and I'll pay it back later is the other rationalization. So yeah, like, with cash, it's that quick thinking, I need cash now, I'll take it, I'll pay it back, or they won't miss it, and, like I stayed half an hour extra yesterday because Dr. So and so was late, and that put me in a bad position because my kid had to stay longer at after school care. So, I'm entitled to this. So, yeah. So I guess rule with cash, if you can't eliminate it completely from the business, then have a strict protocol. And that strict protocol is going to be about balancing it up the cash that has come in by a practice management system with the cash that you physically have and either banking it daily or batching it, storing it somewhere secure and banking it on a periodic basis. And then on the accounting or bookkeeping end, somebody actually should be matching that cash to make sure it actually does actually hit the bank.
Yep, absolutely. And then the petty cash thing, I'm going to share with you a story one of my mates shared with me at a dinner party, and it caused the night to go downhill a little bit. I asked one too many questions. That's not that unusual for me. I know you've caught up with me occasionally socially, and so that might not surprise you. And then I'll talk to you about something we've found really useful for this. I didn't do this. I wasn't aware of this when I was running general practices. So this mate of mine who's a non-GP specialist as a PM, but really more like a PA in that they're pretty well running, his practice and his life. And so his way of solving the problem of them needing to go and get office supplies and things like that, he just gave her his credit card and all of his details. And I don't know what the limit is, but it's not going to be a $2,000 one. I can tell you that. And so unsurprisingly, you guess what happened next?
Yeah, there's I don't know, was it a Chanel handbag? I'm not sure.
Well, there's a whole bunch of stuff not accounted for. And there's just invoices that have not been entered and the expenditure is higher than it should be. And so this person had a young family. And so it's really easy to have a normal office works purchase that relates to your family purchase and also a business related purchase. Same thing for JB Hi-Fi, places like that. So if you're not providing invoices and receipts that match up with what you've purchased, you've just got a bit of a dog's breakfast to try and work out. And so I had a chat to her about this saying, look, this is, and the questions too many were around, look, this is clearly theft and you're accepting it. And, you can kind of sugarcoat it, but this person's stealing from you and these things aren't for your business because the expenditure's going up and those things aren't showing up in your business. Like you're not getting toner cartridges or whatever in your business. And he said to me, I'd rather that than go through the hassle of getting a new PM. So, so I said to him, look, you and I will have this conversation again. And unfortunately, I've yet to meet somebody who's conducting theft where what happens is it just gets better and goes away.
Yeah.
You'll find there's escalating expenditure. And at some point in time, you're going to have to address this. I strongly recommend you address it early and you change your systems. He wasn't at all impressed with that. It did put a damper on the next half an hour. What we can do instead, though, there's a really cool tool called Wheel. Have you used Wheel? WWL?
Yeah, a lot of our clients use Wheel, and actually we use Wheel in our own business as well. Yeah.
Okay. Do you want to talk about how you use it? And then we might be able to compare notes here.
Yeah. So Wheel is it's I guess like an electronic card in its simplest form. You can switch them on and off via an app at an instant, so it's not a physical card that you have to cancel. You can set up multiple digital cards. Your team members can put them on their phones so they can go and pay for things. Now, those things can be restricted budget-wise, per spend, and to an overall limit. So, for instance, Kelly, who's the office manager here, Kelly has a limit, I think, of $1,000 on her card. So she can go and she can buy some groceries from the store, or she can pay for something else. Now, will also prompt her to instantaneously upload the receipt or the invoice to that purchase, and
I
then
love that feature.
yes, we
So good.
automatically reconcile it. And our policy, she knows that we expect that of her, that something's paid, invoice goes straight up, it's reconciled. And we reconcile our bank accounts and our credit cards and our wheel account every day. So we're all constantly going in doing that. Of course, we're accountants, so it's a little bit easier, but So what I love about Wheel is that you can set a spend limit on a per day or a transaction. So you can say, well, Sally in the office here, she only goes and buys milk and biscuits and toilet paper. So she's never probably going to need to spend more than $50 in a transaction. So that's what her limit will be. The difference to that than a normal credit card is you might have a bank credit card, and it might have a limit of 1,000, 5,000, 10,000, whatever it is. Your employee can take that over to, wherever they're going that day, as you say, JB Hi-Fi, and say, well, I'm going to buy something for $800 at JB Hi-Fi today. And on the way back, I'll get the $20 of milk. And, there's nothing to stop them from doing that. So I do love that about Wheel. The other thing is you can set up budgets, spend within there. So you can set up particular Wheel cards, Wheel employees, where they can have a budget and they can spend X dollars towards this in that budget. So it's just quite flexible. You can turn it on and off. Somebody leaves, resigns, turn it off instantly. There's no worrying about it. So it's got sort of that more protection built in and no cash, basically.
Yeah, removes all of that. I love the prompting for the invoice. So, and it just keeps badgering you until you give it. And so as long as the standard in the business is that if you spend money, that's fine, but you need an invoice and justification afterwards. The other thing that, at least in my experience of using it, is that it's a debit card. And so you've got to preload the funds. If you can't spend money that isn't in there. So it's not like a credit card in that you're taking it below zero. Literally, they all get filled up. And then at your fortnightly meeting, you would be recharging those. And sometimes this is a hack that I learned from Dan Martell's book, Buy Back Your Time, which is if everybody in the team has them at their position, they're just cascading budgets. And so effectively the budget is what would you need to solve the type of problems that occur at the level of the game that you're playing in your role? And what would you require to be able to fix those without needing to go and ask for money outside of that 2-week cycle? Whatever the answer to that is, that's the amount of money that gets charged on those cards. Not everyone needs one, but your admin leadership sort of level and above definitely lead them. You might have 1 or 2 people in the reception team. Your nurse might need some to buy something in terms of equipment or something that breaks. They need to order quickly. And then as it goes up, obviously the budget would be a little bit higher, maybe for entertainment and things like that. Provided you've got really clear rules around these, it's a really cool system to invoke and just say, we're not using cash for any of this stuff anymore.
Yeah. Yeah. Totally agree. There's no real need for petty cash in a business anymore.
No, exactly.
Any cash you take, you should be able to bank it that day. This one area has actually improved somewhat with the changes that many practices have made with banking direct to doctors and funds flowing directly to doctors. So what we are seeing is that cash that used to come in at reception and be pooled and then used for petty cash and things like that is now actually paid on to the doctors straight away. So that has helped somewhat in the practices that are doing that system, but there's still a lot of cash problems out there.
Yeah, absolutely. All right. Anything else that you think we need to be sharing on this? And just so everybody listening knows, Kelly and I are going to collaborate, put together a checklist at the end that you can take away and run in your practice just to make sure you haven't left anything out. I just want to make everybody here feel a little bit better by just saying you don't have to do that overnight. But if you sort of had a view that over the next 6 to 12 months, I'm going to make my practice impenetrable by fraud, then that would be a useful mindset. And just every month, tick a few more things off and just go for the really high value things first. And Kelly, you've talked about some of those, like separating out the functions, not having team members being able to move money or make payments. I think that's really important. And the triple verification of changes to banking details. Those small things will make a big difference. We've just talked about cash. What else is on your mind that you wish people knew before they came to you and shared their story about the pain they've had?
Yeah, I think one thing that we should mention is addressing that there is a piece of work that you need to do around your culture and maybe even upskilling yourself as an owner. So we need to make sure that there's good communication and that everybody in the practice knows whose responsibilities are what the processes are, and that there is work going on behind the scenes in checking and managing the financials. I think for too long we've all ran on the, I guess, a bit of a fallacy that, well, GP owners are too busy and they're not good at financials, so they'll just let somebody else handle that. And I just don't think that that flies for any business owner. So I think if you're a practice owner and you're not sure about your financials, you wouldn't know where to look. You're worried that if there was fraud going on, you wouldn't even be able to pick it up because you're just not literate enough financially. That's probably a piece of work that you need to work on yourself and address. And it could just be some small things like every month you work out a system, like you get a monthly P&L and you compare it to the previous months. Or you could spot check a few accounts. So you could go into Xero and say, well, this month I'm going to check electricity and printing and postage and stationery, and just trace those transactions through and just start to understand what's going on in your business and how things are paid and flowed. I think doing that and make that visible, like let people know that you're doing that and that you're involved in that. So I think that that's a big one for me, is just sort of leading from the top in taking control of that financial management and being inquisitive.
Yeah. So, Kelly, if owners hear themselves say things like, I'm not good with money, I'm not a great business person, I'm not really in it for the money, all these things that we hear people say, it's really important to catch yourself. So, it's okay to say, I'm not as good with finances I'd like to be. And then that puts the onus on you to be better. I know you've shared some recent work. I did go back and stalk your LinkedIn on the three most important documents that owners need to know in part of their practice. And so we could share that video in the notes below this. But if people want to go looking for that, that's on Kelly's LinkedIn profile. And super important to know this work. It's unacceptable to be passive in this seat. If you're an owner, the primary purpose of the business after solving, well, maybe it's the secondary purpose, but after solving the problem that you set out to solve, in our case, providing general practice services to our community and really good quality ones if we're doing the job well, it's a for-profit enterprise. So you need to make money. If you're giving it away to people or people are taking it without your permission, that is a huge problem. And it's going to keep happening to you in other areas of life if you're lax with your guard on money. So you do need to be better. That's not acceptable to say those things, think those things, or just push it away. I did have somebody that I talked to recently, Kelly, about joining Project X, and they shared with me a story like what you've just talked about. Oh, this person does all the work. They've done it for decades. I'm working my backside off. I'm not making any money. And based on my calculation, this person should have been making around about 200 grand a year. So my estimate is that this person has had $100,000 to $200,000 a year stolen off them over a decade. They shared with me they didn't spend enough time with their family. They've missed out on a bunch of stuff. They're really highly stressed just because they didn't want to have an uncomfortable conversation with a person that has likely been pocketing this for the whole time. And I just said to them, you need to get an accountant, you need to get a bookkeeper, not your mate who's, did accounting with you back in 1965 when, you graduated from uni, somebody who's a specialist in the area. And so again, at the end of this, I sort of say, make sure you're using subject matter experts, the likes of you in accounting and bookkeeping as well. I know you run a bookkeeping service, but make sure that you're using people that know where the bodies are hidden in the spreadsheets and the bank account balances, because that already helps you to know, okay, they already know where people play funny buggers. Any final tips you'd like to share?
I think that it was my final tip. Be inquisitive and be in control. Yeah, and reach out. And look, I don't mind being the bad guy sometimes too. So I'm often the bad guy that has to step in and query staff members about different things. And I see that as part of my role. So, if you can't do it yourself, well, look, I encourage you to do it yourself.
Yeah.
But if you
Yeah,
can't,
yeah. You're not
group
offering that as a
helpers
service.
that are willing to be the bad guys.
Yeah, absolutely. Outsource and get a second opinion. And I think the last thing to say is if people don't feel right, if they feel like something's wrong, they're working hard, they're not getting the return, there will be a reason why. It's almost certainly going to be something in the finances. Hey, Kelly, thanks. You've been a great sport. I appreciate you playing full on. We'll collaborate, create that document, share that in the show notes below. And again, people should go and follow you on social media, LinkedIn, Facebook, and get all the goodies that you have to offer. Thanks so much.
Thanks, John. It was great. Thank you.